Hey, so what's going on, everyone? So today I want to talk about what it takes to qualify for a mortgage. Specifically, I want to talk about the basics of qualifying for any mortgage, whether you're looking for a first-time home buyer loan, whether you're looking to buy your second home, whether you're looking to buy multifamily buildings, or whether you're looking to refinance a loan that you're already in. There are three basic items that you need to have under control and um, have access to in order to qualify for any loan that you're looking for. So, as a mortgage broker, I have access to all kinds of different loans. So, conventional mortgages, FHA, investment loans, hard money, um, multifamily loans, commercial, you name it. And we could do all kinds of different things like down payment assistance. We can use income from other sources. We can do a lot of things to make a loan work. So a lot of people come in and they've heard about different types of tactics, things that they can do, and they want to get going on that, which I encourage. But in order to get going on those more advanced tactics, you need to first have the basics totally under control. And that's what I want to talk about here, the basics to qualifying for any mortgage loan and how to get yourself prepared for that. So before we get into these three areas that I want to focus on, I want to talk a little bit about the mortgage process in general and what you should be thinking about and how you should prepare yourself. So this mortgage process is going to be it's going to be an invasive process. You're going to have to provide basically all your financial documents to the lender in order to get approved. So you're going to have your tax returns, your pay stubs, your bank statements. All of that is going to have to be ready to go, and you're going to have to be able to provide those. So what I suggest is when you do start preparing for your mortgage, um, start to get access to these documents electronically. So you know, get set up with your online banking so you can get your bank statements electronically. Um, have your tax returns scanned and have those electronically, as well as any other tax documents like W-2s, 1099s, things like that. Um, just start preparing yourself to hand over those documentation. If you truly want to get a loan, that's what's gonna be necessary. So you should start preparing yourself to have that. And like I said, have them electronic or digitized because a lot of people will come in with paper documents, and eventually that's going to have to get scanned in and digital. So if you already have it, that's going to move your process along a lot faster. And if you have access to your bank, because you're going to have to keep updating your bank statements, so if you have access to your bank and your bank loans, that's going to help a lot to move your process along a lot faster. Also, if you are doing a refinance loan on a mortgage that's already in place, or a second loan or a line of credit, you should also have your mortgage documentation. So your mortgage statements, as well as your property insurance documents, as well as your property tax documents. So you just start collecting those electronically as well. So you're ready to submit everything to your mortgage broker or your loan officer. So now let's get into what we came here to talk about, the three essential basics for qualifying for any loan. So the first will be income. So you're going to need 2 years worth of income that can be documented, and that is the most important part. It needs to be able to be documented that we can show the underwriter exactly what your income is. So for for a simple for a simple example, if you just have a W-2 job and you get pay stubs, then we can easily document that with your W-2s for 2 years, your pay stubs, and your 2 years worth of tax returns. Um, for self-employed individuals, we may need 2 years worth of tax returns to see your Schedule E or your Schedule C to see what that income is being reported there. If you have rental income or other business income, we may need that the Schedule C or whatever schedules that you are reporting those on. Um, if the tax returns aren't available or aren't ready, we also can do things like a bank statement loan. But then once again, we need to have access to those bank statements, either 12 months or 24 months, so that we can go through them and see the deposits and use that as an income source. The main thing is, like I said, we just need 2 years of income that we can document and show. Um, everybody's different. People have different situations, but you need something that is actually showable to the underwriter that we can say this is the income that we're working with. There's always ways to add more income, like if you add a side hustle, or if we're adding a co-borrower, um, or if we're adding bonus income, things like that. We can do. But like I said, the first part is to have your baseline income be able to be documented so we know exactly what we're working with there before we start going into any of the advanced aspects of income and income documentation. The second aspect of qualifying for any mortgage loan is we're going to need a clean credit report. And what do I mean by a clean credit report? I don't mean that you have to have a great credit score of like a 700, 800 credit score. We can work with different credit scores, and like I said, there are advanced tactics of credit repair, credit enhancement, that type of thing. But what I mean by a clean credit report is that all the information is accurate and open for us to collect. So what I mean is that you have no blocks on any of the credit bureaus. So if we pull the credit report, if you work with us, we're going to pull a soft credit report at first, so we're not giving you no inquiries or affecting your credit score in any way. But when we pull that report, we need to be able to see all three credit bureaus. So if you have any locks or blocks, those need to be taken off before you start to qualify for the mortgage. Also, we can't have any disputes on any of your credit lines, meaning if there's inaccurate information or if you're going through some sort of credit repair process where you're disputing some of the things on your credit report, that needs to be complete before you start your mortgage process. Because if there's any disputes, that's going to affect your credit score, and the lenders are going to want those to be taken care of before we can move forward. So we need to get all those disputes gone. Other things are all the information should be accurate as far as your address, your contact information, your names and aliases. All that should be accurate and consistent. Because if there's any inconsistency, we're going to need to be able to explain that, and that could cause some issues down the line with the mortgage. Another thing is student loans. A lot of people have deferred student loans, or they have some sort of payment plans in place. So all of that documentation needs to be ready to go. So if you're deferred, we need either the email or the paper documentation showing that you are deferred. If you're on a payment plan, we need that payment plan information to know how much you're paying. So like I said, the main thing here is we want all the information to be accurate. We don't want any disputes or any locks on the information. So then we can start working on it from there. Once again, you don't need to have pristine credit or a good credit score, but we just need the information to be accessible and accurate, so then we can, if needed, work on your credit, even pay off some debts to help you qualify for more. Things like that are possible, but first we need that baseline of the clean and accurate credit report so that we can start working on it. The third item to qualify for any mortgage loan will be some liquid savings that is actually in your bank account. Here, you don't need a whole lot of money if you don't have it, because we do have processes like down payment assistance, Most of these loan programs allow gift funds. There's things like seller credits and other things that can reduce the amount of money that you need to have. But you do need some money. You're not going to be able to qualify if your bank account is at zero or very low, just because there are going to be some things that you need to do as far as appraisals, inspections. If it's a purchase, you're going to have to put an earnest money deposit down. So you do need some money in your account in order to make these financial moves. So start saving. Like I said, if it's $500, if it's $1,000, whatever you got, that needs to be liquid and in your account, so that we can work with it. Um, on those same lines, if you are making deposits into your account, say you have cash um, under under your mattress, that needs to get moved over to your bank account, and we need to be able to document that. But since you're not really going to be able to document cash, that needs to be moved over to your bank account, at least 3 months ahead of you qualifying for your mortgage, so it's not showing on your account. Um, that's one thing to do. Any other deposits, like if you're transferring over um, from a friend or things like that, or if you are making large deposits, those need to be able to be documented. So if it's a business deposit, then you could document that through your business sources, invoices, or whatever way you might document that as a business deposit. But the lender is going to ask about any large deposits that they see. So you want to be able to make those deposits at least 3 months before you look to qualify for a loan. The other thing I wanted to say here was, if you're using retirement accounts, a lot of people are able to borrow from the retirement account or even just withdraw money from the retirement account. You're going to want to plan ahead and talk to your retirement company beforehand, so you know what the withdrawal rules are, and you'll be able to show that documentation about how to withdraw the money, and that you are also allowed to withdraw the money from your retirement account. So you want to plan ahead, so that money's ready to go when you're ready to go. And then once again, there are some advanced tactics we can use here to really minimize the money that you need to have. Or if you're just a regular person that want to do a regular conventional loan, 20% down, all that money just needs to be able to be verified in your account beforehand. And that's the main thing here is, you want that money in your account, so the underwriter doesn't have to ask too many questions about it. And then you also want to have access to your bank accounts on an ongoing basis, so as the mortgage goes along, you can provide updated bank accounts and bank statements to show that the money is in the account and ready to be transferred. So those are my 3 pillars of qualifying for any mortgage loan. 1, documented income. 2, clean credit report. And 3, liquid savings. If you can put together these 3 items, you can qualify for any mortgage. If you work with us, we have so many programs that we can turn to. So no matter what your situation is, we can find a loan that works for you, as well as make adjustments and use some creativity to really do what it is you're looking to do. But we are going to need those first 3 pillars to be right, so that we can build upon them. So yes, that's the main thing I have for you guys. Like I said, we have many programs that we work with. We have a free online mortgage application that you can take a look at. It uses a soft credit pull, so it doesn't affect your credit report at all. So if you're just in the market to start looking, that's a great place to start, to where we can help you build these 3 pillars and then build upon them. Take a look at the link in the description if you're looking for the online mortgage application. reach out to us with any questions that you may have. We love to go through different scenarios and different situations. All right, I hope to talk to you soon, and this was a fun one. Bye.